Hello and welcome. You're watching Morning Brief at 9. I'm Shweta Kothari. On the show today, we will discuss what can India's jobless expect from Budget 2025. And later on, what's in store as far as the Bharat Global Expo on auto. All that was out there for people and you to watch out for on Morning Brief at 9. Watching Morning Brief at 9. I'm Shweta Kothari. Let's take a quick look at the headlines we're tracking this morning. External Affairs Minister S. JAISHANKAR attends the first Quad meeting under Trump 2.0, holds bilateral conversation with US counterpart Marco Rubio and NSA Mike Waltz. Donald Trump warns of 100% tariff on BRICS nation within hours of taking office as the 47th president goes after BRICS, threatening to impose 100% tariff on member countries over their de-dollarization efforts. And 22 US states sue Donald Trump over citizenship order. Attorney generals from at least 22 states sue Donald Trump to end birthright citizenship guarantee that US-born children and citizens get regardless of their parents' status. And India to take back 18,000 citizens from the United States. Indian government is prepared to work with Donald Trump administration to identify and take back all citizens residing illegally in the US to comply with the incoming American president. And row over Swiggy, ZOMATO'S quick food delivery service. The National Restaurant Association of India opposes private labelling by e-commerce platform Zomato and Swiggy as they try to enter quick commerce food delivery through separate apps. Restaurant Association to file complaints with relevant regulatory authorities. FLIPKART co-founder Sachin Bansal's new fintech startup Navi Technologies cheated out of 14 crore rupees last month. Miscreants posing as customers managed to scam the Bengaluru-based startup out of significant sum by exploiting a bug in their system. And banks' debt rises by 88,000 crore rupees in the last 2 weeks of 2024. Borrowing comes amid slowdown in deposit growth to fund loan demand, according to latest data from Reserve Bank of India. India launches a new Diamond IMPREST scheme to boost export. The government introduces Diamond IMPREST authorization scheme. The scheme allows duty-free imports of natural cut and polished diamonds. Move aims to promote value addition and boost exports. Quick commerce firm ZEPTO is considering raising IPO size to $1 billion from $800 million. CEO Adit Palicha discusses ZEPTO's listing plans with top mutual funds recently. And all those stories and more will be discussed here on Morning Brief at 9. Our top story at this hour, as the government gears up for Budget 2025, unemployment concerns are weighing heavy on Asia's third largest economy, India. India faces a critical challenge with rising unemployment and experiencing its slowest growth in at least last 4 years. As Finance Minister prepares to present Union Budget on 1st of February, industry stalwarts say that addressing job creation must take priority. And despite efforts, India struggles to generate quality employment for its young population. Now, this poses a risk of turning its demographic dividend into a disaster. So while job is expected to draw government's attention in Indian Budget 2025, the question remains how. Let's talk about that. Joining us on the show is Bornik Chitran Moitra. He's the managing partner at Chrysalis Capital. Bornik, good to have you back on the show. Thank you very much for taking time out. I want to come up to you with the first big question, and that is, there was a substantive allocation to the tune of about 2 lakh crore rupees in the budget of 2024 solely to generate jobs. But on ground, things haven't really moved much. In fact, there's not a lot of clarity on some of those schemes that were announced. Is there room for more budgetary allocation?
So I think you have to understand that the government has been focused on job creation through 2-3 different avenues, right? In addition to allocations for training and internships, which was the big highlight of the last budget, the government has consistently invested in capital projects and capital expenditure with the hope that it will trigger industry creation and investments to create more jobs. Now, where I think the entire plan has fallen short is that the government has been pretty brave and bold to invest money to up to around 5% of GDP on these areas. But the private capital allocation, both from domestic industry and also FDI, has not kept pace. So the fundamental challenge remains the same. How do we create more industries, notably job-creating industries like manufacturing and services? And more importantly, how do we attract private capital to create these industries? Because without the absence of private capital, the government capital can only be a catalyst to creating these jobs, right? You cannot just create it through internships or public capital expenditure.
Absolutely. And in order to attract that private capital, we know that there were employment-linked incentive schemes, at least 3 of them announced in the budget last year. The details on operation, however, were not clear. These ELI schemes were expected to last for 2 fiscal years, but so far, end of fiscal year 2025, we are not really seeing some of these details really emerging. And therefore, the numbers are not translating on ground, Banik.
No, I completely agree. So if you look at, and again, as any investor, right, and even a corporate in India, the entire thesis for either capacity expansion or venturing into a new industry will be based on the fundamental economics of the investment and the IRR of the investment. Any government schemes, whether they be ELI schemes, and there has been a lot of discussion on other schemes like PLI and all of that, which I've also taken for, can often only be the cherry on the top, right, for any such business cases. Now, fundamentally, what we've seen is people don't have enough confidence either in their business plans or in the sectors they are operating to make the big investments needed to create jobs. Now, if you look at, again, one important metric I track is FDI investment into India. Even if you look at gross investments, it's been stuck anywhere between $5 to $7 billion a month, right? And has been range bound at this number for the last 3 fiscals. In fact, if you look at the last peak we had in July 2020, where nearly $19 billion of FDI happened in a single month, we've never seen that over the last 3 years, right? So again, there can be many schemes, right, which encourage people to create jobs or encourage people to invest in manufacturing. But if the fundamental business case on a risk-adjusted basis does not make sense, it's very hard to expect people to invest money into either job creation or capital projects or industries without the entire case for the full investment coming back. So I think the challenge for the government, which is a holistic challenge in the budget, is how do you ensure that the public investment actually crowds in private capital, which has been the bet over the last 3 years, but we've not seen it. And more importantly, I think we are also headed towards a little bit of a perfect storm where questions of a slowdown of economy, which is, I think we've grown at the slowest rate in the last fiscal, but that is also compounded by news on consumption slowdown, export slowdown, is not giving much confidence to corporate India or foreign investors that this is the right time to invest in the economy.
So this is like a chicken and egg situation. Obviously, there is consumption slowdown, but at the same time, more job generation will mean more money in hands of people, and therefore perhaps more consumption. So, the private capex will have to come in at some point or the other. But I think one of the concerns of government this time around will also be formalization of the job market. A substantive number of people who are currently working, are employed, are in the informal sector, and hence, very little to nothing to account for when it comes to how many jobs that are being created on ground. What exactly will the government do and can do to formalize more people? Because that continues to be a headache, a formalization of job market.
See, I think the trend on formalization, unfortunately, is headed in the wrong direction. India has always been a very large informal economy with 85 to 88% of the total employment being in informal sectors. Even if you look at service sectors, the rise of the gig economy and a lot of the jobs which are getting created either in the technology world, the food delivery world, or in the startup world, a lot of them are actually gig workers who in an ideal world would have been white collar jobs, right? But have become blue collar jobs given the kind of informal nature of the employment. So I think the government has to really, I think it's a little bit of a carrot and stick, right? It's very hard to expect investors or corporates to formalize jobs, right? Because with formalization comes additional costs in terms of statutory requirements, which often holds people back. I think you have to work on many areas. First is, I think, labor law reform, which has been a fundamental panacea for job creations and creation of manufacturing units in India, needs to be relooked at. There was some momentum in this in the second part of NDA 2, right, where some states had stepped forward and were proactively modifying the labor code. Over the past 2 or 3 years, I think that pace of momentum has slowed down. Unless there's confidence that India is now working in a 21st century labor code, I think the intent of people to hire people formally on roll will continue to be low. So I think it's a combination of factors the government should look at. Budgetary allocations and incentives are one part of it, but more structural reform in the labor code and other structural reforms which encourage people to set up either high-scale manufacturing facilities or invest in services sector,
Right.
which should receive a fillip given the weak rupee is an imperative. So again,
All
it's
right.
not just
I want
about
to-
budgetary allocations,
absolutely.
but looking at reform. Yeah.
Staying on with the informal economy. You mentioned gig workers, and that's been an important conversation over the course of last 1 year. There is a need for labor codes as far as gig economy is concerned. The government says they were working on it. Now, given that about 85% of all people employed in this country are in the informal sector, and gig workers are a substantive part of that informal sector, is labor codes for gig workers, for gig economy now imperative?
So I think it's an imperative if you look at the kind of the hours and the working conditions of the gig workers, right, which often come to fore. So there has to be labor codes to ensure that there is formal, I would say, treatment and there's a formal system of managing it. But that also has to come hand in hand with a liberalization of general labor codes across the board, so that the disincentive for startups or other technology companies to depend on gig workers come down. See, if you look at the reason in the West, the reason why a lot of people sign up for gig workers is flexibility, ability to work multiple jobs. In India, it's the other way around. I think the startups encourage gig workers because they don't have to have the hassle of permanent employment and dealing with the labor commissioner and the law. So labor codes for gig workers are welcome. But in addition to that, the government should enforce a reform of general labor laws in India so that entrepreneurs are encouraged to hire employees full-time on roll, which includes ability to fire at will, ensures that people are encouraged to hire so that they don't face any repercussions if business goes up and down. So there are many things. I think labor codes are welcome, but again, it has to be part of a broader labor code transformation to encourage formal workers in all segments of economy.
All right. And you also mentioned the opportunity that is on the anvil by the way of services sector. Now, there is a mismatch, Barnik, when we often talk to, HR experts as far as market demand and the skills that Indian youths have to offer. Perhaps the focus on skilling hasn't been enough. And that's the conversation a lot of HRs are having of late, that there needs to be a renewed focus on skilling.
So I think the skilling efforts kicked off a decade back have borne fruit, and they focused a lot on, I would say, bottom of the pyramid kind of workforce to get them skilled. For the services sector, you need a different approach because the kind of skills you need are more directed towards people who either have college degrees or diploma and who have to be trained for the modern economy, including technology, AI, and all the developments. So I think we need to relook at our skilling agenda. While the focus on skilling millions of people to be ready for either manufacturing jobs or construction jobs is a good imperative, but we should again start looking at how can we be competitive on the global scene when it comes to new areas of the economy like technology and AI, and there needs to be a new mission focused on far more higher skilled workers who today are coming out of university without the necessary skills. In fact, if you look at 15, 20 years back, recruiters have consistently complained that if you look at even the average IT developer, only 3 or 4 out of every 10 graduates out of university actually have the skills to be hired. So I think there is a silent epidemic there. People who are being produced by universities, training institutes do not have the necessary skill sets to survive in today's job market. There has to be investment by the government. More importantly, private sector players also have to step in to educate the skilling program on the kind of skill sets they require in India for them to focus on these opportunities. And we should look at opportunities like this, whether it be in AI and automation, as opportunities for India, because India will be the last to adopt these technologies locally, given that we still have a large labor force which is relatively inexpensive. But this is an opportunity for us to create and support products and services for developed economies where these technologies are actually getting adopted at scale. So there's an opportunity for India. I think it would be great if the finance minister can create the necessary budgetary allocation, but also the incentive structure for a private-public partnership to focus on skilling for more higher skilled workers.
Right. In fact, just a quick takeaway from the India Skills Report of 2024, it highlights that about 50% of youth, employable youth, with the requisite qualification don't necessarily have the requisite skills. So there is clearly a mismatch there as far as skilling is concerned. Let's quickly also focus on manufacturing jobs, because that is going to carry on its shoulders the opportunity and the responsibility of driving job growth in India. Do you see any increase in expected capex allocation to drive job growth? But there is a conversation here that even as capex has been rising year on year to about 11 lakh crore rupees in budget of 2024, the utilization has not been to its 100%. So therefore, that is also one of the reasons why perhaps not many jobs were created. But given that government's priority will be to give fillip to job creation, are you looking at a greater capex allocation?
So for me, I think, Shweta, you hit the nail on the head when you talked about utilization. I think the larger issue is not allocations. At nearly 5 to 6% of GDP, if you look at the full allocation for capex, which is including manufacturing, also includes infrastructure projects, India is one of the largest allocators of capital on paper to job creation and infrastructure and manufacturing creation. The challenge has been utilization, and the challenge has been twofold, right? One is the kind of regulation and the conditions which surround the utilization and the dispersal, and I do not fault the government with setting stringent norms. If you look at the entire fiasco around FAME subsidies, there were a lot of misuse, a lot of disuse, and a lot of cheating. So some of those guardrails have to be put in place. But I think the government should have even a better system to look at credible investors and credible companies to see if you can expedite the allocation of capital. So for me, it's not the absolute allocation, but the dispersal and the requirements which industries have to meet to be eligible for it. So a lot of industries look at these schemes and say that, listen, it's fine that if we start drawing down capital from these schemes, but what about the kind of regulation and the future regulation and the enforcement which comes about when we are actually participating in these schemes? So there's still reasonable trepidation on what happens if industry participates in schemes like that and they miss a few targets on a genuine basis, because the government tends to be heavy-handed on everyone, people who deliberately misuse versus people who may have missed a few parameters.
Right.
So there's a fundamental relook at the criteria and the enforcement. I don't think there is any need for greater allocation, because the Honorable Finance Minister has been generous in allocating to infrastructure projects and manufacturing projects. We have to look at the entire conditions, other reform, including labor, which talked of land acquisition, local state regulation. I keep looking at the ease of doing business, right? And that's an important metric, because that's what drives private capital. Even where we have made progress there, but we are nowhere close to the top 20, 25 countries of the world when it comes to ease of doing business. In the absence of significant transformation in that, we can allocate as much as capital as we want, but I think there will still be trepidation on people to use that, and more importantly, bring their own capital to the party when it comes to investing on that. So again, I would see the government actually announce better schemes in terms of the utilization, maybe relaxation of a few norms, maybe we create a different channels. Maybe there's a green channel for larger, more credible investors who are bringing in real capital with lesser scrutiny and more, I would say, liberal approach, and more stringent channel to lesser credible investors. So there needs a new approach. I think just allocating more money, as we've seen, will not do the job, because we don't see a utilization of those funds.
All right. Before I let you go, there were a slew of schemes announced in budget of 2024. One of them was the internship scheme, expected to give internships to about 1 crore youth over the course of 5 years. Throughout the year, we saw a lot of clarifications coming in, private companies coming up with a lot of questions as to why and how the government will support it. But so far, not much has moved on ground. Do you think the internship scheme is here to stay? Perhaps the government needs to provide more clarity on why should private players actively participate and take on the burden of giving internship to these youths?
No, absolutely. I think if you look at the private investors and also private corporate India, there's trepidation of participating in the government schemes because of A, lack of clarity, B, the fear of future enforcement and future, I would say, measures by the government in case the corporates don't adhere to all the T's and C's. To be fair, I have spoken to a few industries. I think the challenge we have is we announce these big policies, and then all the detailed framework behind it and I would say the regulation of that is not often clearly mentioned. And then the government takes its own sweet time to issue clarifications, right? So I think there needs to be a better approach for the government to announce these schemes, wider consultation with private bodies, and having a year-long framework where at least there is 3-4 months of work which happens before announcing schemes, where actually industry input is taken and industry is brought on board, saying that this is what industry will do, this is what we will do, and here is how we'll administer the scheme. Has to happen before the budget. I think the government is very happy to announce big schemes, then a quarter is taken to issue the guidelines, then there is 2-3 quarters of clarifications, and then we come to the next fiscal with less than 10% utilization of the scheme. We have to break out of this cycle and ensure that policy announcements happen more through the year with consultation. Right. Maybe the budget is a time for doing the budgetary allocation and not just announcing new policies for people to participate.
All right. I think a lot of people, youth and young people, will be looking at budget for some sort of relief as far as employment opportunities is concerned. Banik, thank you very much for taking time out. Thank you for joining us on the show today. And before we head into break, let's quickly take a look at markets opening in the green today. Sensex at about 76,153 on your screens. Opening in green, up 0.36%. Nifty up 0.36%. Sensex up 0.42%. There is some volatility as far as India Wix is concerned. Also up 0.95%. Mid cap and small cap under pressure. Both of them are down 0.7% and 1% respectively. That's the markets, as far as this morning at 9:20 is concerned. We'll get you all the markets action after this very short break. Stay tuned. You're watching Morning Brief at 9.
Mama must be missing us, na?
Let's take it one bit, give me one day. Really each on my skin, it's a one day. You believe it when you see we in that, hey. When it doesn't matter, just gotta get going.
New GT line, Taigun and Virtus. Volkswagen.
कि बड़ा होके मम्मी का, पापा का, दादू का सबका ध्यान रखेगा।
रिटायरमेंट के बाद किसी पे बोझ ना बनने का परफेक्ट प्लान। कैनरा HSBC लाइफ इंश्योरेंस रिटायरमेंट प्लान। कैनरा HSBC लाइफ इंश्योरेंस, प्रॉमिसेस का पार्टनर।
HCV9E. Test drives open on 26th January.
Bonjour, madam.
आज बड़े फ्रेंड्स बन रहे हो? हाँ?
याद है 10 साल पहले मैंने कहा था I will take you to Paris.
पेरिस नहीं, पेरी। तुम्हारा प्रोनाउंसिएशन भी ना तुम्हारे इरादे की तक।
मैडम इरादे कभी ऑफ नहीं होते, टेक ऑफ करते हैं।
SBI लाइफ स्मार्ट प्लैटिना सुप्रीम के गारंटीड रिटर्न से करो पूरे अपने इरादे, अपनों से किए सभी वादे। SBI लाइफ, अपने लिए, अपनों के लिए।
Victory for the East India Company in the Battle of Plassey marked the beginning of their rule over Bengal and later almost all of the Indian subcontinent.
When Clive arrives in Murshidabad after the victory of Plassey, 24 boats are loaded with the treasure of the Murshidabad treasury and punted down the river to Fort William, Calcutta.
Anything that's said to belong to Tipu was acquired and sold and traded and treasured.
They always knew that at some point in time they will have to come to a state where they will have to fight with the Marathas.
You know, the Kohinoor has in the eyes of the colonizers and the colonized become a sort of symbol of colonial loot.
This loot is displayed in British museums. India's looted treasures.
Welcome back. You're watching Morning Brief at 9. We're bringing you latest from the Bharat Mobility Global Expo. Now, Hyundai India launched the much-awaited Creta Electric at the Auto Expo 2025, price starting 17.99 lakh rupees ex-showroom. It's going to be available with 8 monotone and 2 dual-tone color options and 4 variants to choose from. The Creta Electric comes with 2 battery pack options with a claimed range of 473 kilometers. Top features include a panoramic sunroof, ventilated and powered front seats and a dual 10.25-inch displays. News 9's Krishna Kumar spoke to Hyundai India CEO Tarun Garg at the launch about Hyundai's EV plans and India's consumption story.
We're in conversation with Mr. Tarun Garg, COO of Hyundai India. Tarun, thank you so much for taking time out to be with us here on News 9. We are here at the Bharat Mobility Global Expo 2025, where one of the most awaited launches or showcases is the Hyundai Creta, and more importantly the pricing of Creta that has been announced over here. 17.99 lakhs is where the pricing begins for the Hyundai Creta. Talk to us. The original Creta was a blockbuster success. What are your expectations from the e-Creta?
Thank you, Krishna. We're very happy because Creta, like you said, in 2015 when it was launched, SUVs used to contribute 13% to the overall sales, and Creta changed it all. Today SUVs are contributing 53% to the overall sales. Creta Electric probably could do the same. India is at an early stage of electrification. Last year we sold 106,000 vehicles, electric vehicles in the four-wheeler space with a penetration of 2.5%. I think we are very excited today because I believe that Creta Electric, and of course so many more electrics which are going to come, and we are seeing them in the Bharat Mobility 2026 could see the volume double of electric four-wheelers in India.
2026 as by next year the volume of electric vehicles could double. But talk to us about Hyundai's own electric mobility plans per se, because it's not just the electric version of Creta that's being launched, it's also the electric Ioniq 9 that is finding its showcase at this Auto Expo, isn't it?
So if you see Hyundai Motor Group is very, very committed towards sustainability, and we have all kinds of technology, whether it is battery electric vehicles, strong hybrids, plug-in hybrids, even hydrogen. So we are very lucky as HMI, we get access to all these technologies, and we are very happy today to launch the Creta Electric, and going forward we are going to launch 3 more electric vehicles, and they will be a mixture of not only different segments but also base up EVs as well as derived EVs. We are also investing into the ecosystem. We have already localized the battery packs. Going forward, we have tied up, collaborated with a local Indian manufacturer. We are looking at cell manufacturing. We are looking at power electronics, drivetrain. So I think all in all, we are really investing into the entire EV chain, whether it is on supply side or also on the charging infrastructure side.
And that is going to be crucial to improve the electric vehicle adoption in India, isn't it? For now, electric vehicle sales, electric car sales contribute just about 2.5% of the overall sales of cars in the country. How do you see that going up in the coming new year? And more importantly, what do you think the Creta and the Ioniq 9 and other launches that we got lined up? Just to double check, are all your other new EVs going to be launched again in 2025, or can we get a timeline on that?
Look, Bharat Mobility is a opportunity for all of us to really showcase products, to take feedback. So I'm not going to really tell you about the future launches, but like I said, 3 more products on the EV space are going to be launched. And you mentioned about the penetration. I believe that by 2030 we could be somewhere around 17-18% EV penetration, and the trigger could be 2026, where we could see maybe doubling of the EV market in India.
And staying on with Auto Expo, Maruti Suzuki roped in Karthik Aryan as their brand ambassador for Brezza 2.0. The collaboration was announced on 21st of January at the Bharat Mobility Expo in Bharat Mandapam. Partho Banerjee, Senior Executive Officer, Marketing and Sales, Maruti Suzuki India, along with Karthik Aryan, did a short media briefing before the stage announcement and also spoke to my colleague.
Today we are associating with both. Brezza and Karthik is a new chapter in our brand Brezza, and we feel that this is going to start a new journey for the brand Brezza.
I'm sure Brezza is a high performance car, but do you see that it can match the performance of Karthik Aryan at the box office?
No, that's a very good question. Your good name? Your good name?
Preeti from TV9.
Preeti. Preeti, I have to say only one thing. Karthik is rocking. Bulbulaya 3, box office success. At the same time, Brezza is also rocking. This year it's growing at a phenomenal rate of 18%. Industry is growing at the rate of only 4%. Brezza is growing by 18% and could be the blockbuster of this year. Could be.
Wow. Yes.
So we are keeping our finger crossed, and that's why I think now Karthik coming in, the positive reverb goes both the sides, and let's see how it moves ahead actually.
Wow.
कैसे हैं आप लोग? हाँ? वहाँ पे आओ, अभी आता हूँ। थोड़ी देर में वहीं पे बैठने आ रहा हूँ। पर उससे पहले वहाँ पे भी आऊँगा, मैं वहाँ पे भी आऊँगा, हर जगह आऊँगा, उधर भी आऊँगा। लेकिन मैं यहाँ जनरली मैं फर्स्ट टाइम मैं ऑटो एक्सपो में आ रहा हूँ, और मुझे नहीं पता था कि मैं मारुति सुजुकी ब्रेजा 2.0 लॉन्च करने यहाँ पर आऊँगा, एंड कैन वी हैव जोरदार तालियां for Brezza 2.0.
Hi Karthik, thanks for speaking to News 9. I would like to ask you that how do you feel being associated with the homegrown Make in India Maruti brand?
I'm really happy to be associated with Maruti, and we are launching Brezza 2.0 over here at the Auto Expo Delhi. So I'm really looking forward to it, and it's like a brand which during my childhood only I used to feel that it's like a family brand. It's like a brand which everybody in the family loves, and Brezza is going to be catering to a lot of youngsters, youth in the country, and because of the way it is, because of the performance value of the car, and I feel the way it looks. So I guess it's a great association between me and Brezza and Maruti. So I'm really.
Was Maruti your first family car too?
Yes, it was. Yes, that's why I just said that in another interview where we were discussing about what was my first car memory, and I told them that it was just about being in a Maruti 800 with all 4 of us in the car, my family. So
indeed a proud moment to be now the brand ambassador of the same car.
It's a big moment for me. It's a proud moment for me, and it's it's like a full circle for me in a way, where from actually sitting in maybe in my friend's car and thinking Maruti 800, arey wah, yeah. So and now being a brand ambassador of the same brand, it becomes it's a full circle.
Okay, so we can see you driving Brezza in any of your upcoming movies?
Yes, you can. I hope so, because in movies sometimes you don't know what is their thought process actually. But usually in reality, you would see me in a Brezza.
Great. All the best for your association. Thank you.
And that is Karthik Aryan in conversation with my colleague Preeti Agnihotri. And time now for another Newsline exclusive. Shriram Finance, a leading non-banking financial company, is a prominent player in the financial services sector, particularly known for providing financing solutions to commercial vehicles and small and medium enterprises sectors. It is one of the largest players in the Indian commercial vehicle financing market. Newsline's Krishna Kumar spoke to Umesh Revankar, Executive VP of Shriram Finance at the Bharat Mobility Global Expo. Take a look.
In conversation with Mr. Umesh Revankar, Executive Vice Chairman of Shriram Finance. Umesh, thank you so much for taking time out to be with us here on News 9. If I were to ask you, on that note, to talk about interest rates, you know what is happening with the interest rate cuts as far as the US Fed is concerned. How do you think, the interest rate cycle in India going to be?
See, interest cycle in India has been maintained for nearly a year now because of the inflation. See, inflation numbers are not really improving significantly. The comfort level of RBI is around 6% CPI, and now it's around 4%, it's around 6%. So it's around 50% more than what RBI would prefer to be. So therefore, the interest rate would remain elevated even if there is some kind of rate cut, maybe in February. It may take a while for interest rate to come down to common man, because it will not happen. Transfer is not immediate. Transfer will take time. So whatever happens, it will take 6 to 9 months for the general interest rate to come down.
Okay, let's then talk about Shriram Finance. First up, tell us, how come you're here at the Bharat Mobility Expo, at the Auto Expo in Bharat Mandapam?
See, we are the leading lenders for all mobility activity. If you look at the way we have built our business model over the period, right from financing to truck to commercial, all kind of commercial vehicle, passenger vehicle, two-wheeler, construction equipment, and even tractors. So everything that moves is being financed by us, and we also have been very, very clear that we would like to lend to small ticket lending, in the sense individuals who would like to set up their business, want to start their business. We would like to be with them. So when we have a large customer base, it is better that we need to place ourselves in a right platform. So this is the right platform for us, because I would like to remind you that we are the largest two-wheeler financier now. And if you see here, many of them have come to see how many new two-wheelers are getting launched, what are the new models are likely to come, what are the three-wheelers or four-wheelers, and of course trucks. This is what is for tomorrow and also for day after tomorrow. This is once in 2 years, and you normally see what is likely to come in next 2 to 4 years, and how you have to imagine yourself, plan yourself for buying any asset, buying any what you call vehicles. All those things people would like to know. So we would like to be here and be in the middle of the people, and also try to gauge what people's mood are. That also is very important for us to plan ourselves.
Okay, talking about the future, there has been some strategic shifts at Shriram Finance, from selling off the housing finance arm to now moving into a new first-time vehicle financing, from pre-owned to new first-time vehicle financing. So talk to us about that. Right now, majority of your financing still goes to pre-owned vehicles, but you're looking to increase the share of the first-time new vehicles that you're financing as well.
Yeah, you are right. It is a strategic decision. We wanted to focus on our core business. Our core business is to lend to business activity, mobility solution for the individuals. And when it comes to mobility solution, then we have to focus on what is most convenient to the individuals. And we found that there are a lot of aspirational people who would like to buy for the asset for the first time. And especially when it comes to two-wheeler, it's always people prefer to buy a new vehicle. And that's one. And also we would like to see what are the other challenges people have in looking for mobility. Now imagine the evolution of a green vehicle, that is electric vehicle. That is something we would like to be very keen and want to participate right from the beginning of the journey of electric vehicle, because not only it is new to India, it's not new to the people, it also gives us a sustainable resource management for the entire the community per se. So we are not looking at financing the two-wheeler or three-wheeler or four-wheeler. We are also looking at charging station. We are also looking at solar panel being financed, because government is now giving a lot of subsidies or support to the people who would like to convert into more of a green solution.
Right.
So we would like to be there, and we want to be part of an initial journey itself, so that we learn our business model, we make proper adjustment into our business model in the beginning itself.
Right. Talking about green solutions, you're also getting into financing electric vehicles as well, aren't you?
Yeah, green is basically electric vehicles.
Not just charging stations. So you're financing everything from electric vehicles to charging stations, the entire ecosystem.
Yeah, entire ecosystem. That's the idea. But just by financing vehicles, you are not going to address all the issues. By creating an ecosystem, you are also supporting the environment. That's the idea behind it.
And look at Bharat Mobility Global Expo here. The headline seems to be electric vehicles. All major car makers are launching electric vehicles. So EV is the theme of this Auto Expo as well.
Yeah, it is likely to be. We need to see how things are shaping up. I have had to visit to different stalls and find
Fair
out.
enough.
But I definitely feel there will be a bigger focus on the green. And also for India, imagine Indian manufacturing, if you look at, we have most of the whether it is a IC engine or gearbox, most of them are imported. So we are not actually original manufacturer of many of the parts. So for us, adopting and moving on to green is easier, because we have certain experience in electric engine, and then onwards, if you are able to find right solution for the battery technology, and there is sufficient, I was told, the research in India on the battery technology. If it is matching, then India can be a major hub going forward. The way China has already emerged as a leader, so India can easily move into that line without really disturbing the other ecosystem that is built for IC. So I think we have a very comfortable situation now in experimenting and going into the new ecosystem, which will be not only sustainable but also would become cheaper. That's what I believe.
Okay, you believe it could be cheaper as well, not just sustainable. Let's also talk about the CSR space, the corporate social responsibility space. How do you think India Inc. is performing when it comes to CSR? And more importantly, talk to us about Shriram Finance's CSR initiatives.
See, we have been always trying to help people, the community which we have been serving. In the sense, we are in the logistics ecosystem, lending to buying vehicle. So we would like to be in that environment and see. So what we have done is, we are initially training the drivers, not even existing driver to become better drivers, so that there is less fatigue, the less accident, and better driving for them. That's one thing. And the driver training is something which you have done for more than 10 years, because there is a huge driver shortage. There is less enthusiasm for people to take up driving as a profession, because of the not so much of encouragement from the society, or maybe even income. Once we give them a proper training, once they are capable of driving heavier truck or more complicated engines and machines or vehicles, then their earning can become 3 times or 4 times. So we want to encourage that, so that you get some respect for that profession, and that's one thing. So, and shortage of driver get addressed indirectly. And we are also giving a lot of education support for the community, driving community as well, because we should understand that a driver typically drives the vehicle for 20-25 days and out of home, and he may not be visiting home as often as other parents, and there is a directional issue for the children. So we felt that people from 8th standard onwards to 12th standard, if you are able to give them some kind of a scholarship, they are likely to continue and finish 12th, and once it comes to 12th, then he'll take a call what he should do further. Because he'll be around 18 years at that time, and we also are now find solution and give some kind of support for the higher education as well. Now initially it is focused on professional courses, then over the period we would like to support other. So one is this community, and also the mechanics, two-wheeler mechanics, giving them basic training, because in the smaller towns there are not enough trained mechanics, and also today because of the change in the technology, IC engine itself is going for a change, and most of the movement of the engines need to be addressed through a laptop. Even a truck today, when I visited one of the mechanic shop in Vijayawada, which is hub of transportation, he told me, sir, why don't you donate us a laptop? Because we need laptop to really understand where the challenges are in the engine, if there is engine problem. So that means there is new evolving technology coming, and the EV is nothing but moving computer. Okay. There are, so you need to train people in different ways. So we are also focused on that. Okay. So we are also giving a lot of medical assistance, because many of them, they do not have medical facilities. The driver community where they stay out of town, most of them, they don't have medical facilities. We have provided mobile vehicles going there and checking up for free checkup, and also free medicine. So we have done more than 2 million customers, sorry, not customers, 2 million community people, patients, who can come and do freely. So these are all the things which we do. Okay. And we would like to be more associated with the government, because even the higher driver or what you call the training also gets a certificate from the National Skill Development Council, and that certificate is equivalent to 12th standard pass, or he can get a job which is 2 to 3 times more than what he is already earning. So these are all things we feel that being a part of the community, supporting the system, we can really help the community around us. That's the way we would like to look at CSR. I do not want to comment on how others do CSR, India Inc. doing CSR, but how Shriram does CSR, I can tell.
Okay, one last thing, talk to us about the growth path for Shriram Finance. What are the targets you're looking to achieve?
See, we can easily grow around 15% year on year. That's the initial guidance we are given. And right now, for last 1.5 years, we are going at around 20%, because the environment has been good. There is a lot of positivity, there is a lot of credit demand, and we also have increased our capability because of the merger. We have merged 2 entities, Shriram Transport Finance and Shriram City Finance, cross-selling the products and making more product available, and using the data analytics better, and understanding the customer requirement, customizing the product. All those things we have done in the last 2 years, and that has given us the higher growth, higher margin, lower credit cost. So everything has been very positive post-merger, and we are hopeful that we will continue to give this kind of what you call good results to the stakeholders and make them happy.
And what are your expectations from the upcoming Union Budget 2025?
See, budget is something which I expect. Last 1 year, if you see, the government spend has come down significantly, because that is the India's growth is mostly dependent on government spend. The private capex is not still moving the way we expected. Even the consumption also looks a little weak, because I feel there is not enough job created. The infrastructure spend creates a lot of unskilled and semi-skilled jobs, And I think that's something last 1 year is missing because of the election and so many other reasons. I think in this budget, the entire focus will be on the infrastructure and also trying to give some kind of a support for private capex to come in so that more jobs gets created. So the infrastructure, job creation and supporting MSME small businesses are going to be a broad focus of this budget is what I believe strongly.
All right. Mr. Shriram, thank you so much for speaking to us.
Thank you very much.
And shifting focus now to some global stories we are tracking this morning. Wall Street's main indexes closed higher on Tuesday as investors assessed Donald Trump's first actions as the US president and appeared encouraged. He didn't kick off the second term with blanket tariff increases. The Dow gained about 1.25% and S&P 500 added almost 0.9% and the Nasdaq climbed more than 0.6%.
Wall Street's main indexes closed higher on Tuesday as investors assessed Donald Trump's first actions as U.S. president and appeared encouraged he didn't kick off his second term with blanket tariff increases. The Dow gained about 1.25%, the S&P 500 added almost 0.9%, and the Nasdaq climbed more than 0.6%. While markets remain cautious about tariffs, investor optimism is high, said Robert Conzo, CEO and managing director of the Wealth Alliance.
I think there's just a very strong positive feeling coming off of that inaugural address. And the positive feeling drives around earnings and corporate CEOs lining up behind Trump saying, let's get on the Trump train. And you saw that during the inauguration. You saw some of the heads of industry literally sitting by his family. CEOs are on board for the most part with Trump. That's good for those companies, most likely. And as such, that may be good for the market.
After the close, shares of Netflix, which gained in Tuesday's session, surged in extended trading after the streaming giant added nearly 19 million subscribers in its holiday quarter, blowing past Wall Street's forecasts. Other stocks on the move Tuesday included 3M, which rallied more than 4% after reporting upbeat fourth-quarter results. Utilities got a lift from nuclear power stocks, including Vistra Corp and NRG Energy, after Trump issued a flurry of orders intended to boost energy production. Shares of automakers rose. They're most sensitive to tariffs due to their vast supply chains. Ford added 2.5%, while General Motors gained 5.7% after a rating upgrade from Deutsche Bank. On the flip side, heavyweight Apple was the S&P 500's biggest drag, losing more than 3% after brokerage Jefferies cut its rating to underperform.
And that is all we have on Morning Brief at 9. News and updates will continue on the other side. Keep watching News 9.
B6 Test Drive.